Hey guys, welcome back. Before we get into the video, I just want to take a moment to say thank you to each and every one of you. You probably saw it already, but the Market Signal channel has grown over 40,000 subscribers, and I wouldn't have been able to do that without each and every one of you, without your support, without your engagement within the channel, frankly, without watching this content each and every night. So before we move, I just wanted to take a moment to say thank you very much. I appreciate all of your support of the channel. Let's keep growing it together. All right, today's video, I probably am going to talk about what each and every one of you are thinking about, because we saw kind of mixed price action today. We saw Micron moving strong throughout the day. The last 30 minutes, we had a flush. We saw profit taking, frankly, all day with SanDisk and Western Digital. The optical players were down. We had a bit of a mixed result across the tech sector today. But it's that last 30 minutes to me that I want to show you in the candle pattern chart that shows to me that there was a systematic kind of a coordinated effort of profit taking across the entire memory sector. No matter if it was Micron, SanDisk, Western Digital, Seagate, SK Hynix, each and every one of them had the same dynamic in that last 30 to 25 minutes in the market. There was a flush. Before these earning prints even hit the street, there was a calculated effort to capture products and to sell these stocks heading into the closing bell. So just know that right now. If you're feeling any anxiety, if you're looking in the after hours and you're seeing stocks that you love red right now and kind of bleeding a bit, even with phenomenal earning prints that drop the street, and we're going to go through those, guys, and don't kid yourselves, those were absolutely stunning earning prints. They were probably some of the best quarters that we have seen in the sector yet. So we're going to go through those. But if you're sitting at looking at your positions right now, wondering, is this memory and storage super cycle starting to crack? Is it showing signs of a crack? I want you to set those fears to the side. We're going to walk through some data in tonight's video that I think will show you that the memory and the storage super cycle is not only intact, it is actually accelerating, and the fundamentals are strong as ever. We'll look at the earnings from SanDisk and Western Digital. I'll show you the areas of strength and what it means for the sector. But then I want to show you some comments from Elon Musk in his earnings call last night with SpaceX that means everything to the sector itself, and his conviction and his just sign of what the demand is right now in the marketplace. It should give us all a higher level of conviction if we can get there, honestly, because I know many of us on this channel have a significant amount of conviction in these stocks in this sector. We'll go through that. I'm going to show you the big tech article that came out in Barron's today. It's not just about 2026 CapEx. There is significant investment and commitment from each and every one of these hyperscalers in 2027 right now with purchase agreements. We're going to walk through that because it is a massive amount. We're talking about close to $3 trillion of commitments right now that they have for the hyperscalers over the next couple of years. This is not a one-time thing. The commitment that we see for building out the AI infrastructure right now is not going to stop in 2026. And that is a great story, not only for memory, it's a great story for optical, for compute, for picks and shovels, for everyone across the board. That is, this money from these hyperscalers is being funneled to. And then finally, I'll end the video with two things. I want to show you a cool, innovative product that is coming out of the Future of Memory Storage meeting that is happening right now in Santa Clara, California, something that Samsung just announced. It's kind of a cool, innovative approach that they will have. It's one of the reasons why I love this sector, because Micron, SK Hynix, Samsung, they're not just sitting back and collecting profits. They are continuing to push innovation. They are continuing to bring new products to the marketplace that help meet their customers' needs. And that's exactly what Samsung announced today at that conference. Finally, I'll give you my outlook overall. We'll give you kind of summarize everything we saw today and give you an outlook for what I expect to see tomorrow. Let's get started in the video. But again, if you haven't done it yet, if you guys wouldn't mind, like and subscribe to the channel. All right, let's get started by just taking a look at some of the sentiment that's out there in the marketplace. Before I even get to the earnings, just take a look at some of the headlines that I think is driving some of the fear, uncertainty, and doubt with the sector right now. This one is in Barron's. SanDisk earnings soar, but stock is dropping. The next one, a Market Watch, is even more concerning to me. It's very kind of misleading headline. SanDisk stock falls as company's forecast doesn't live up to high expectations. Guys, they crushed expectations. They beat their own expectations. They set significant guidance for the next quarter. Apparently, they're just not living up to the whisper numbers from some Wall Street analysts. And this is what's driving sentiment right now in the stock. So it's not the fundamentals. It's not anything with the company. It's not the demand in the marketplace. It's whisper numbers that's driving SanDisk down. And then finally, Western Digital was not immune to these headlines as well. So Western Digital stock tanks, and earnings beat isn't enough for the stock. And we saw what it did today. SanDisk had the pressure throughout the day. So did Western Digital, actually. They both were down about 5% in regular trading hours. See SanDisk down by about $77. In the after hours right now, it's down about 7.5%, about $100 right now, trading close to $12.50 a share. Western Digital, very similar, down about a little over 5% in regular trading, down over 11% in the after hours, trading towards $4.60 a share right now. But remember, I talked to you about that. I said in the beginning around this calculated effort of profit taking before the close, the same dynamic we saw with each and every one of the stocks in the sector. Take a look at Micron. Micron was cruising around 917, 920 all day into the last 30 minutes where we just had this flush. And this huge market on close here just kind of pushed the stock down from 920 to closed at 893. But it was the same dynamic we saw with SanDisk. Look here in the last 20, 30 minutes. Same dynamic with Western Digital, and the same dynamic with Seagate as well that we saw in the last 20, 30 minutes. So guys, what we saw at the end and some of the red we're seeing right now, in my opinion, was just a clear kind of calculated profit taking by the rumor, sell the news event prior to these earning prints being dropped on the street. Probably a little bit of anxiety coming into the close here. We know the sector's been volatile, no question. It's had a nice run over the last week, so there probably was some people harvesting some profit. And I'm never getting mad at any investor for harvesting profit, but we just have to separate that profit-taking mechanic or mechanism we're seeing from a true structural kind of a cracking in the fundamentals, because that didn't happen today. Let's dive in and take a look at a few key items for both SanDisk and Western Digital. SanDisk, I want to jump to their revenue. Take a look at the revenue, $9 billion, just under $9 billion actually in the quarter. It's up over 51% over the prior quarter, which we know was phenomenal. And it's up 372% year over year. If you take a look at their earnings per share, $39.25. As this was a company a year ago that had earnings per share of 29 cents a share. And now they're at $39.25. Phenomenal growth for the company. Their gross margin was just about 85%, and we're seeing $5 billion in adjusted free cash flow. If we scroll down and kind of take a look at their segments of the business, they clearly said in their comments that data center is their pillar of strength. It's where their growth will be long-term. It's where kind of their focus is right now. And you can see that $3 billion in revenue for the quarter. It increased over 100% from the prior quarter. It's up 1,300% year over year. So significant growth they're seeing right now with data center. Edge is another area of business for them where it's almost $5.5 billion in revenue, about 48% quarter over quarter, 392% year over year. Consumer is a much smaller portion of business. In both SanDisk and Western Digital, some of the comments that I heard from analysts around why this stock disappointed was because of softening in their consumer business. Guys, Western Digital and SanDisk, it's probably 5 or 6% at most of their revenue line. And so, yes, consumer was down 32% for this quarter over the last quarter at 5% year over year, but it is a minuscule focus for them of their business. Their clear business focus is data center and an edge. So I'm not worried about consumer at all, both for SanDisk and Western Digital. If we go to their kind of big piece that they announced, which was their new business models. So they have 8 customers signed now across data centers and edge. It's a minimum contracted revenue of just about $94 billion. That's the floor. It could go up higher the way these contracts are structured. There could be a bit of a higher ceiling there, but it's a minimum of $94 billion. And we see $16.5 billion of guarantees and cash deposits and instruments right now. And if you look across the bottom, look at the bits that are already committed and secured. Half of their bits are committed in these contracts for next year. 2/3 are committed in the full year of 2028. And these contracts range from, on average, about 4 years of weighted duration, 5 years. Some of them are up to 5 years. So this is clearly a strong pivot for SanDisk. Gives them great revenue visibility. This is kind of how they're restructuring their business with guaranteed revenues right now. And if you look at their market outlook, they expect the NAND market to continue to grow. As they said, we estimate the NAND market will exceed $3 billion in revenue in calendar year 2026, a 3x growth year over year. They expect it to grow to $500 billion in calendar year 2027. Demand from our customers is growing faster than our supply, and we expect bits to remain on allocation beyond calendar 2027. Finally, let's look at their guidance, because this is another area where they've got dinged a bit. Now, they guided for 10.3 to 10.8 billion. Now, where they got dinged is the whisper number that I mentioned was 11.2 billion. Some Wall Street analysts put out this lofty whisper number, and the fact that they didn't guide to that number is why the stock is kind of soft right now in the after hours. Absolutely insane, in my opinion, because this is a strong growth for the company. 10.3 to 10.8 billion, with earnings per share between 44 and 46 dollars, and gross margins continuing to hang in that 83 to 85% range. So strong growth for SanDisk, in my opinion. This company dropped an absolute, just fabulous print on the street. And if we jump over to Western Digital, we'll go through that real quickly. Western Digital's highlights: 3.75 billion in the quarter. So that's a 44% growth year over year for their revenue. Their gross margin is actually significantly higher. It's a 54.4%, operating margin at 44%. And you can see they expanded their non-GAAP gross margin by 1,300 basis points year over year. We're seeing their EPS at 356. So that is a growth of 109% year over year for their earnings per share. And they have started shipping their next generation ePMR, that 40 terabyte drive. Great news for the company. If we look at their business, it's all being driven by cloud. 89% of the business right now is being driven by the cloud. This just shows you the demand that the hyperscalers have for the products, both by Western Digital and Seagate. The fact that 89% of their business is coming from it. And it's been that way consistently, 80-90% over the last few quarters. We just see their revenue going up, but the split of that revenue has been pretty consistent overall. And if we jump over to their earnings, their guidance moving forward, you'll see they've guided for 4.1 billion plus or minus 100 million. Their gross margins are staying right where we want them to be, 55 to 56%. And we see earnings per share of $4 per share for the next quarter, plus or minus 15 cents overall. So really strong performance for this stock as well. And you have to ask yourself, like, why, if they're so strong, why are we seeing them drop right now? And I do think part of it was this sell the news event, profit-taking event that we saw. And I think there was some concerns around softness with consumer area, which is a very small portion of the business. And there's concerns around, not hitting that whisper number for SanDisk. I think the expectations probably were just really sky high overall. But the reality is they were incredibly strong prints. I think both stocks tomorrow, I think we will see them kind of push down a bit, and they'll probably test some support levels. If we look at Western Digital, will probably test that 450, 460, 460 level of support. SanDisk will probably be around that 1250 level of support. But both these companies, but Western Digital, if you look at a company that is guiding for $16 in earnings per share annualized, they have a 55% gross margin, and they are generating, 1.3 billion in quarterly free cash flow. SanDisk has absolutely amazing revenue power. So both of these companies, the dips that we're seeing in post earnings right now, the dip we're seeing in after hours, are what institutional players absolutely love to see, because they step in and they accumulate these shares from retail investors that just have nervous, anxious hands. So I think we will see institutional support step in and drive these stocks back up tomorrow or towards the end of the week overall. And so I want to shift now just to Micron. I want to talk a little bit about the news that we saw with Micron. As I mentioned earlier, Micron was cruising along about 920 all day and had that flush at the end that you saw on the candle chart. In fact, it got up to about 929 a share today. It was actually really looking like a strong day into those last few minutes. And then we're seeing kind of a sector-wide sell the news in the after hours right now. So Micron is down by about 2.5%, $24, trading right now about $8.69. But there were some strong signals that came out. First one I want to talk about is from Elon Musk and what he dropped in his earnings call yesterday. You see the headline here. It says, Elon, he addresses memory chip stock concerns with one simple observation. They go on to say that any earnings call with Elon is entertaining. This one was on the SpaceX earnings call, but his comment, or what the author picked up, the comments on memory chip, is what captured his or her attention. And it is basically what Elon said is one of the world's largest buyers of compute. He said that the limiting factor is currently memory. Great sign for the sector. This drove the initial price action we saw with Micron this morning. It was driving the stock up higher based on this observation and commitment from Elon. If we go down, you can say, it goes on to say that Elon is an individual that has a very distinct vantage point on this because of his position at Tesla as well as SpaceX. And he said that memory output is increasing by about 20% per year. And normally that's fantastically fast for any large mature industry. But ask yourself, is the demand increasing by 20% a year? He says absolutely not. That demand is increasing by 200%, if not higher, a year. So we are significantly seeing demand outstrip supply. And this is the reason why you see this urgent requirement for memory and to build out the infrastructure is why Musk is both diplomatic and grateful to his suppliers, the author says. So he thanked in Tesla's earnings, he called out Micron by name and thanked them for allocating memory. In this earnings for SpaceX, he called out and expressed gratitude for NVIDIA, saying they have the best chips, and that's all he's going to use. And that kind of comment drove AMD down the other day after their earnings. But they go on to say that this should be music to the ears of memory chips, because what we're also seeing from the chief investment officer, he says that game theory suggests that long-term arrangements are likely durable. Long-term agreements are one way that the chip makers can prolong or ensure their earnings and margins by tying up clients into deals that last years. So great comment from Elon, just calling out that memory is the bottleneck right now. We've kind of known that, but for him to say that on that stage is a great sign for the sector. And then this drop too, because they talk about the arrangements, and it says here that Micron dropped stunning clue about next memory cycle. So you see here, Micron, Samsung, and SK Hynix, they have reportedly sold out their projected 2027 DRAM and HBM capacity, signaling that AI-driven memory shortage could persist considerably longer than investors expected. According to DigiTimes, suppliers have already allocated the projected 2027 DRAM and HBM production, with customers receiving only around 60 to 70% of requested volumes. Final pricing has yet to be determined, potentially giving producers like Micron considerable negotiating leverage if demand continues exceeding available supply. So that's the major hint that they're saying in this article from Guru Focus, is the fact that DRAM and HBM are now completely committed throughout 2027. And this is giving us a sign that the memory shortage is going to persist considerably longer than we expected. And then I want to get over to the big tech side. This article I found fascinating today in Barron's, because it says big tech quietly locks in, $2.7 trillion in long-term commitments. So they want to mention that, now that the earnings season is behind us, it's in our rearview mirror. But the large numbers linger on, and it goes well beyond the infamous CapEx figures that we saw from Google, Microsoft, Meta, Amazon, and Oracle, who mentioned they will spend $800 billion in combined CapEx expenditures this year. But as we learned in the pre and post earnings, the filings, companies are spending hundreds of billions more on leases and purchase agreements for chips, energy, and other capital goods. So it says it was buried in the notes of companies' quarterly findings are the long-term commitments totaling $2.7 trillion. We scroll down in here. In terms of future spending disclosures, Alphabet leads the pack here. It has committed a stunning $811 billion for technical infrastructure and inventory through long-term supply agreements and open purchase orders, as well as energy contracts and content licenses. So they speculate that this rapid growth for Google or for Alphabet is a hint that they are one of the customers who signed a long-term memory supply deal. But just take a look at the graph here. We're looking at, this is beyond CapEx. So this is future leases and future purchase agreements for Alphabet, which is up to about 900 million. Meta, which is, I think, right about 700 billion. Microsoft, Oracle, and Amazon. So all of them have significant commitment moving forward. Guys, so that's why I said in the beginning, this is not just a 2026 CapEx story. We know the leaders for the memory, like SK Hynix, their CEO and chairman, they said 2027 is going to be the most constrained year yet. We're seeing the hyperscalers kind of plan for that with this massive commitments, both on their purchase leases, as well as just leases overall. Is that how they phrase it? Let me just check. Yeah, future leases and future purchase agreements, excuse me. So significant amount, 2.7 trillion. That is money that is going to go flow right to the memory providers. And finally, I want to wrap up the video by talking about a new innovative product. So Samsung, they unveiled a ton today at the Future of Memory and Storage Conference. I'm only going to focus on the one, but there is a ton in here. I want to focus on the ZHBM that they're talking about. So let me jump down. So they are designed, their ZHBM presents a new memory architecture that vertically stacks HBM directly above the AI accelerator, moving beyond conventional designs in which HBM is positioned right next to the processor. So by minimizing the distance the data travels between the AI processor and memory, ZHBM is designed to deliver higher bandwidth, improve power efficiency, enabling ultra-fast data processing required for large-scale AI training and inference. It's expected to deliver 8 times the performance of HBM5. With next-generation wafer bonding technology, ZHBM can achieve more than 10 times the memory density of HBM5 while enhancing energy efficiency threefold and reducing thermal resistance by more than half, maximizing the stability and the power efficiency of high-capacity, high-bandwidth systems. So really cool architecture. I got to read up more on that. I just wanted to bring it to your attention because I think this, to me, just shows that these companies are not sitting back. They're continuing to innovate, design, and bring really cool products to the marketplace. So let's jump over and close out the video and take a look at this graphic that I pulled up today, summarizing all the stories that we saw. If you look on the far left, you can see the operational reality versus Wall Street mechanics. SanDisk and Western Digital just dropped absolutely beautiful prints on the street, demonstrating the revenue power that they have, the demand for their products in the marketplace. Every operational data point confirmed that memory and storage supercycle is operating at maximum strength. If you take a look in the next graph, it is the supply-demand asymmetry. What asymmetry? What Elon said, that we're seeing supply grow at 20%, but demand is growing at 200%, if not more. So suppliers hold all the pricing power in the market right now. Structural shortages are guaranteed to persist. We have this $2.7 trillion safety blanket of the hyperscalers and the commitment that they have next year. These purchases agreements and these lease agreements, it's locking in this multi-year supply, locks in the future and secures the future for AI. And then finally, the architectural moats are widening. Just the cool, innovative products that Samsung dropped today. I think all of the other companies have been discussing new approaches, new products in the marketplace, new innovations and designs. It really is what keeps this sector the most exciting, in my opinion. So today's noise is temporary. The super cycle is not cracked. It is strong and is concrete and as real as ever, in my opinion. So when we take a step back, I would say, don't panic based on what you saw today or what you may be seeing in the after hours. Stay disciplined. Market volatility post-earnings is designed to shake out retail confidence. Focus on the structural contract duration that we saw, the record cash flows, the pricing powers, not the after-hour noise that we're seeing. The market can debate valuation. It can debate multiples. It can debate whether stocks got ahead of themselves. But after tonight's earnings, it's much harder to argue that the AI infrastructure demand is disappearing. The companies supplying memory and storage right now are reporting record margins, record cash flows, multi-year contracts, and customers are still asking for more capacity than they can ship. Tomorrow's opening bell won't tell us whether the super cycle is alive. Tonight's earnings have already answered that question. Tomorrow's opening bell will simply tell us how Wall Street chooses to price it. So guys, have a great night. I hope you enjoyed the video, and I look forward to seeing you tomorrow on the next one. Take care.